Robert Kiyosaki just said something that has the entire silver community in absolute chaos. The man who's been stacking silver since 1965. The author of Rich Dad, Poor Dad, one of the best-selling financial books of all time. The guy who's been screaming buy silver for months while it rocketed from $30 to $92. He just posted this: "Please be careful, silver peaking. There will be a major pullback before it begins climbing again. I stand by what I am doing. I will buy silver up to $100 and wait." Let me read that again. Silver peaking. Major pullback. He's waiting for a crash before he buys more. And then he drops this bomb. Millions of silver spectaculars are selling as prices go up. The sellers will crash the silver market. And then he finishes with his classic rich dad wisdom: pigs get fat, hogs get slaughtered. Now, if you're holding silver right now, that probably made your stomach drop. If you're about to buy silver, you're probably frozen, not knowing what to do. And if you've been following Kiyosaki, you're probably confused as hell, because wasn't he just telling everyone to buy silver last month? Here's what makes this absolutely fascinating. Kiyosaki has been one of the most bullish voices on silver for the past year. He's predicted $200 silver. He's told people not to miss the explosion. He said silver is going to the moon, and now he's calling a top. Now he's warning about a crash. Now he's telling people to be patient and wait. So what changed? Is he right? Is he wrong? And most importantly, what should you do with your silver right now? In the next 25 minutes, I'm going to break down Kiyosaki's exact strategy, analyze his track record, show you why he might be right, why he might be catastrophically wrong, and give you a framework to make your own decision. Because this is not simple, and anyone who tells you it is lying. Before we dive into his prediction, you need to understand who Robert Kiyosaki is and why his opinion matters. Because this isn't some random guy on Twitter making bold calls. Robert Kiyosaki wrote Rich Dad, Poor Dad in 1997. That book has sold over 40 million copies worldwide. It's been translated into dozens of languages. It fundamentally changed how millions of people think about money, assets, and wealth building. But more importantly for this discussion, Kiyosaki has been buying silver since 1965. Let me put that in perspective. In 1965, silver was trading at around $1 per ounce. Today it's at $92. That's a 92x. Return over 60 years. Kiyosaki didn't just buy silver once and forget about it. He's been an active buyer through every major cycle. He bought in the 70s. He bought in the 80s after the Hunt Brothers crash. He bought in the 90s when silver was dead money. He bought in the 2000s as it climbed to $50. He bought after the 2011 crash. And he's been buying aggressively over the past few years. According to his recent posts, he was buying silver at $70 per ounce just weeks ago. He's publicly stated he's accumulated significant positions over the decades. This is not speculation for him. This is a core holding. This is generational wealth built on physical silver. So when a guy with 60 years of experience in the silver market, who's made a fortune buying and holding the metal, suddenly says, be careful, a crash is coming, you have to pay attention. But here's where it gets interesting. Kiyosaki is also famous for making bold, dramatic predictions that don't always come true. And recently, his predictions have been all over the place. Let's be brutally honest about Kiyosaki's track record, because it's not black and white. He's made some incredibly accurate calls, and he's made some spectacularly wrong calls. You need to see both sides. The good calls. In October 2023, Kiyosaki posted, "Gold will soon break through $2,100 and then take off. You will wish you had bought gold below $2,000. Next stop, gold $3,700. Was he right? Absolutely. Gold broke through $2,100. It didn't stop. It went to $3,000, then $4,000. It recently hit $4,600. He nailed it. He also said in that same post, silver from $23 to $68 an ounce. Silver was at $23 in October 2023. By late 2025, it hit $70, then $80. Now it's at $92. Again, he was right. In September 2025, he predicted silver was about to explode and said $100 in silver would be worth $500 in a year. That's a 400% gain prediction. We're only 4 months in, but silver has already gone from around $30 in January 2025 to $92 now. That's over 200% in 1 year. So far, he's tracking well on that call. The bad calls. But let's look at the other side, because Kiyosaki has also been consistently wrong about crashes and collapses. He's been predicting an imminent economic collapse for years, literally years. He's warned about bubbles bursting, markets crashing, hyperinflation destroying the dollar. And while some of his concerns are valid long-term, the timing has been way off. In July 2025, he posted, "Bubbles are about to start busting." A follower asked Grok AI how many times Kiyosaki had made similar crash predictions since 2022. The answer? 30 times. 30 separate predictions of imminent crashes, most of which didn't materialize in the time frame he suggested. Here's another one. In January 2025, Kiyosaki sold silver to buy Bitcoin, saying Bitcoin was going to $250,000 within the year. He called Bitcoin this generation's money and said he was swapping his silver holdings for it. What happened? Bitcoin didn't hit $250,000, and silver absolutely exploded from around $30 to over $90. So he sold silver at $30, bought Bitcoin, and missed one of the greatest silver runs in history. Now, to be fair, he quickly reversed course and started buying silver again. But that trade, that was a disaster. So what do we make of this? Kiyosaki is really good at identifying long-term trends. He's really good at understanding that precious metals will rise in inflationary environments. He's really good at the big picture. But his timing, his short-term calls, his crash predictions, those are hit or miss. Actually, more miss than hit. So let's address the elephant in the room. Why is Robert Kiyosaki, who's been screaming buy silver for months, suddenly warning about a crash? Here's what he's seeing, and it's actually based on sound market psychology. Kiyosaki's core argument. Number one, millions of speculators have piled into silver over the past year. These aren't long-term holders. These are FOMO buyers. Fear of missing out buyers. People who saw silver double, triple, and decided to jump in at $80, $85, $90. Number two, these speculators will panic sell at the first sign of weakness. They're not buying silver as a long-term store of value. They're buying it hoping to flip it for quick profits, and when the momentum breaks, they'll dump it fast. Number three, this creates a self-fulfilling prophecy. Once selling starts, it triggers more selling. Stop losses get hit. Margin calls force liquidation. Prices cascade lower. And the silver spectaculars, as Kiyosaki calls them, will crash the market through sheer panic. Number four, after the crash, after weak hands are shaken out, after speculators are destroyed, silver will resume its long-term uptrend. And that's when Kiyosaki plans to buy aggressively, all the way up to $100. Now, is this analysis wrong? Actually, no. This is textbook market psychology. This is how every bull market correction works. Weak hands get shaken out, speculators get destroyed, then the real move, higher, begins. But here's the question. Is the timing right? Is silver peaking right now at $92? Or is Kiyosaki early? Or is he flat out wrong? Let's look at the counter-argument, because it's incredibly strong. Here's what Kiyosaki might be missing. And it's huge. This is not a normal speculative bubble in silver. This is a structural supply crisis. Let me walk you through the evidence. Evidence number one. The U.S. Mint suspension. On January 13th, 2026, just yesterday, the United States Mint sent an official notice to customers suspending all sales of silver numismatic products. They said, rapidly rising silver prices may result in silver numismatic products being temporarily removed from sale while pricing is updated. Translation, the official mint of the United States government cannot price silver fast enough. Physical demand is so strong that they had to pull products off the shelf. This has never happened before in this way. This is not speculation. This is not FOMO. This is a supply crisis. Evidence number two, China's export restrictions. On January 1st, 2026, China implemented new restrictions on silver exports. They reclassified silver as a strategic resource. Only 44 companies are authorized to export silver, and they need government licenses. China controls 60 to 70% of globally traded refined silver. They just shut off the tap to the West. This is not temporary, this is strategic. Evidence number three, inventory collapse. COMEX registered silver inventories are down 70% since 2020. London vaults have lost 40% of holdings. Shanghai inventories are at 10-year lows. At current consumption rates, some regions have only 30 to 45 days of accessible silver reserves. This is not a speculative bubble. This is a physical shortage. Evidence number four, industrial demand is inelastic. Unlike gold, silver has massive industrial demand. Solar panels need silver, electric vehicles need silver, electronics need silver, 5G infrastructure needs silver, military hardware needs silver, and here's the key. This demand is inelastic. Manufacturers will keep buying silver even at higher prices because there's no substitute. They need it. Production stops without it. Evidence number five, the gold-silver ratio. The gold-silver ratio is currently at 56 to 1. The historical average is 65 to 1. During past bull markets in silver, this ratio is compressed to 30 to 1 or even lower. If gold stays at $4,600 and the ratio drops to 40 to 1, silver goes to $115. If it drops to 30 to 1, silver goes to $153. This is not speculative excess. This is ratio compression that happens in every precious metals bull market. Evidence number six, physical premiums. Physical silver is trading at 30 to 80% premiums over spot in various global markets. In Shanghai, premiums are $8 over COMEX. In Japan, 60% premiums. In Dubai, 40% premiums. When physical trades at massive premiums to paper, it means the paper price is wrong. It means real demand overwhelms supply. So here's the problem with Kiyosaki's call. He's applying normal market psychology to an abnormal supply situation. He's expecting a speculative correction when we're actually in a structural shortage. And if he's wrong, if silver doesn't crash, if it just consolidates briefly and then continues higher, then he's going to miss buying silver below $100 while waiting for a crash that never comes. Let me paint you an alternative scenario, one where Kiyosaki's crash doesn't happen, or at least doesn't happen in the way he expects. Scenario 1, the consolidation, not crash. Silver doesn't crash from $92 to $70 or $60. Instead, it consolidates between $80 and $95 for a few weeks. Weak hands sell, strong hands accumulate. Then it breaks out to 110, 120, 130. In this scenario, Kiyosaki sitting on the sidelines waiting for a crash to 70 means he misses the entire next leg up. He's waiting to buy at $100, but silver never comes back down. It goes from 92 to 120 without looking back. Scenario 2, the gap up. Silver has a brief 2 or 3 day pullback to $85. Then China announces even tighter export restrictions. Or the US Mint stays closed for weeks. Or India imports another massive tranche. Silver gaps up to $110 in a single session. In this scenario, Kiyosaki gets a tiny dip, but not enough to deploy significant capital. And then silver is gone, trading at levels where he said he'd wait. Scenario 3, the melt-up. This is the nuclear option. Silver doesn't correct at all. The physical shortage becomes so acute that paper markets lose all credibility. Physical silver disappears from dealers. Premiums explode to 100% or more. And silver goes from $92 to $150 in weeks, not months. In this scenario, anyone waiting for a crash gets left behind completely. By the time they realize there's no crash coming, silver is at $170 and unavailable at any price. Now, am I saying these scenarios are more likely than Kiyosaki's crash prediction? Not necessarily, but they're possible. And in a supply crisis, they're more than possible. They're probable. The difference between a speculative bubble and a supply crisis is this. Speculative bubbles pop. Supply crises gap higher until demand is destroyed or supply returns. And right now, there's no new supply coming. China's not reopening exports. Mine supply takes years to respond. Recycling is maxed out. Now, let's talk about what Kiyosaki is actually doing, because it's more nuanced than he's bearish on silver. Here's what he said in his post. I stand by what I'm doing. I will buy silver up to $100 and wait. Let me break down what that actually means. Kiyosaki is not selling first, and most important, he's not telling people to sell, he's not dumping his position. He's been accumulating silver for 60 years. He's not exiting now. What he's saying is, be careful if you're buying at these levels. A pullback is likely before we go higher. That's different from sell everything, silver is done. Kiyosaki will buy. Pullbacks. Up to $100. Second, he's planning to buy every dip between now and $100. If silver pulls back to $85, he'll buy. If it pulls back to $75, he'll buy. If it goes to $100 after a correction, he'll still be buying. This is not a bearish position. This is a strategic accumulation plan. He's trying to maximize his position by buying weakness, rather than chasing strength. Kiyosaki is trading silver for gold. Eventually. Third, he mentioned in his post that he's planning on trading my silver for gold. This is interesting. He's not planning to sell silver for dollars. He's planning to swap silver for gold at some point when the gold-silver ratio gets extreme. This suggests he believes silver will outperform gold in the near term, driving the ratio lower. Then, when silver gets overextended relative to gold, he'll swap silver for gold to lock in the outperformance. This is sophisticated. This is not sell silver and run. This is use silver to accumulate gold when the ratio is favorable. Kiyosaki is invoking rich dad wisdom. Fourth, pigs get fat, hogs get slaughtered. This is his warning against greed. He's saying, don't get greedy chasing silver at $92 with no plan. Don't FOMO in at the top. Have patience. Wait for better entry points. This is good advice regardless of whether silver crashes or not. Chasing momentum is how retail investors get destroyed. So what's the real strategy? Kiyosaki's real strategy is this. He's a long-term holder using short-term volatility to add to his position. He believes silver is going higher long-term, probably to $200 or more. But he also believes there will be violent corrections along the way, and he wants to buy those corrections rather than buy the top. It's a rational strategy. The question is whether the correction he's expecting actually comes, or whether the supply crisis means silver just keeps grinding higher with shallow pullbacks. Let's look at history, because silver has done this before, and the patterns matter. The 2011 peak. In April 2011, silver hit $49.76. It was a parabolic move. Everyone was euphoric. Silverbugs thought $100 was days away. Then it crashed. By late 2011, silver was back at $26, a 48% crash in months. If you bought at the top, you were underwater for over a decade. Kiyosaki would have been right to warn about a crash in April 2011. That was a speculative blow-off top. But here's the difference. In 2011, there was no structural supply deficit. There was no China export ban. There was no U.S. mint suspension. It was pure speculation driven by fear of quantitative easing. The 2020 COVID spike. In March 2020, silver crashed to under $12 as COVID panic hit. Then, as stimulus flooded in, silver surged to $30 by August 2020. Then, it consolidated for months, pulling back to low 20s before eventually moving higher. If Kiyosaki had warned about a correction in August 2020 at $30, he would have been right. Silver did pull back, but it was a 25% pullback, not a crash. And then it made new highs. The current situation. Now in January 2026, we have silver at $92. Is this like April 2011? A speculative blow-off top about to crash? Or is this like August 2020? A consolidation point before the next leg higher. The difference is the supply situation. In 2011 and 2020, there was no physical shortage. Now, we have a genuine, measurable, acute supply crisis. History tells us that during supply crises, commodities don't crash. They gap higher. Look at oil in 2008. Look at lithium in 2021 through 2022. Look at rare earths when China restricted them. When supply gets cut off, prices don't correct gently. They spike. They gap. They go vertical until demand is destroyed. So if Kiyosaki is expecting a 2011-style crash, he might be using the wrong historical analog. This might be a supply crisis spike, not a speculative bubble pop. All right, let's get practical. What should you actually do with this information? Here's my framework. If you own silver already, do not panic sell because Kiyosaki warned about a correction. He owns silver. He's been buying silver. He's holding silver. His warning is for people chasing at the top, not for people who already own it. If you bought silver at $30, $40, $50, you're up massively. You can afford to ride through volatility. Kiyosaki's warning doesn't change your position. If you're worried about a correction, you have three options. Option 1, hold everything. You believe the supply crisis is real and silver goes to 150 or 200. You ride through any pullback knowing it's temporary. Option 2, take some profit. Sell 10, 20, 30% of your position. Lock in gains. Use that cash to buy back lower if we get the correction Kiyosaki predicts. If we don't get the correction, you still own the majority of your silver. Option 3, set stop losses. If silver breaks below $85, you sell and reevaluate. This protects you from a crash scenario while letting you ride higher if silver continues. If you're planning to buy silver, this is where Kiyosaki's warning matters most. If you're sitting on cash planning to buy silver at $92, pause, not because silver won't go higher, but because the risk reward right here, right now, is not ideal. Better strategy. Wait for a pullback. If silver pulls back to 85, buy some. If it pulls back to 80, buy more. If it pulls back to 75, buy aggressively. If silver never pulls back, if it just goes from 92 to 110, then you missed the trade. That happens. But you didn't buy the top and watch it crash 40% like 2011 buyers did. Kiyosaki's advice to be patient is good advice. Don't FOMO into silver at $92 just because it's been going up. Wait for better risk reward. If you're thinking about timing, here's the hard truth. Nobody knows if Kiyosaki is right. Nobody knows if silver crashes to 70 or melt-ups to 120. The U.S. mint suspension suggests supply crisis. China export restrictions suggest supply crisis. Collapsing inventories suggest supply crisis. But Kiyosaki's 60 years of experience and his warning about speculators suggest correction coming. Both can be true. We could get a sharp 10 to 15% correction that shakes out weak hands, followed by a moonshot to 150. Or we could get no correction and just a slow grind higher. Or we could get the crash Kiyosaki predicts. The point is, you can't time it perfectly, so don't try. Better approach. Have a plan. Know your entry points. Know your exit points. Know what you'll do if silver drops 20%. Know what you'll do if silver goes to 120 without correcting. Most importantly, don't bet everything on one scenario. Don't go all in assuming silver crashes. Don't go all in assuming silver moons. Scale in, scale out, manage risk. So here's where we are. Robert Kiyosaki, one of the most famous silver bulls in the world, just warned that silver is peaking and a major correction is coming before it goes to $100. Is he right? Maybe. His logic about speculators and weak hands is sound. Markets do correct. Bull markets do have violent pullbacks. Is he wrong? Maybe. The supply crisis is real. The U.S. Mint suspension is unprecedented. China's export restrictions are strategic. Physical premiums are screaming shortage. Both things can be true. We can get a correction and a supply crisis. We can shake out weak hands and go to $200. Kiyosaki's strategy is clear. Wait for the crash, buy the dip, accumulate up to $100, then eventually trade silver for gold when the ratio gets extreme. It's a rational, patient, disciplined strategy. If you have the patience and the conviction, it's a good plan. But if you're wrong about the crash, if silver never comes back, then you're sitting on the sidelines, watching it go from 92 to 150, wishing you had just bought and held. This is the game, this is the risk, and this is why nobody, not even Robert Kiyosaki, with 60 years of experience, can time markets perfectly. My take? The supply crisis is real. The fundamentals are bullish. Silver probably goes higher long term. But short term, volatility is guaranteed. Corrections will happen. The question is, how deep and when? Kiyosaki is protecting his followers from buying the top. That's good. But he's also potentially missing the next leg up by being too cautious. That's the trade-off. You decide, you manage your risk, you make your plan, and you execute it with discipline. Because in the end, whether Kiyosaki is right or wrong, the real lesson from Rich Dad, Poor Dad is this. Your profit is made when you buy, not when you sell. So buy smart, buy patient. And don't let FOMO or fear control your decisions. Silver will do what silver does. Your job is to make sure you're positioned to benefit, whether it crashes first or moons from here. Good luck.